Thank you for joining iMeet. When you hear the tone, you will be the 27th person to join the meeting. This meeting is now being recorded.
Hey everybody, good afternoon. This is David Blake with Tuesday Tech Talk. And like always, we're going to review the last couple of days in the market, try to figure out what's going on next. If you're new, we're going to talk a little bit about some different sectors, a little bit about the broader market for about 20-25 minutes, and then we'll open it up to questions and let you ask about individual stocks or anything that we've talked about today. Then after that, we open it up to you all. Okay, had a lot of excitement around the globe the last couple of days with the hurricane, the floods in Texas, and now North Korea last night, I guess, shot a missile over Japan's airspace, which started the market off down triple digits today in the Dow. So we have come all the way back with that, which is not surprising with this market for some reason. But we do want to send our hearts go out to the people in Texas after all the troubles that they're going through. That's from the video I've seen, it's horrible. So, all right, let's get started here. We had a positive week last week, not particularly big, but it was positive. We broke a 2-week down streak, a losing streak. The CTI this week is still in -5. The numbers we're looking at to watch are 21.6 for the Dow and 24.17 for the S&P 500. If either of those indexes would break those numbers intra-week during the day, then the sell in the market would be extended into next week, and we, theoretically, we could extend the cycle, the negative cycle, for several more weeks if we keep making new lows. However, I think we're starting to see some, bottoming patterns in the different indexes, and we want to see that. Even with today's 100-point drop or 130-point drop, we still were about 100 points above that level, and we're back now to where we have about 215 points for the Dow to fall before we would extend that sell cycle. So it's pretty likely that we could see a little bit of starting to slow build in the markets going forward here a little bit. Momentum index is still a -6. That improved last week. Internal breadth was positive, so we are seeing signs that the selling pressure is, maybe is closer to the end and, at least picking up. In addition, as we'll look later on, the outperformance of the Russell 2000 after 4 down weeks is some positive divergence for the broader market. We'll also see if we can get some help from the Dow Jones Transports, which is also showing a bottoming pattern, which could be good for us going forward. Okay, so let me get my arrow here, and we're going to look at the Dow. Okay, and a lot of these patterns that charts that we're going to look at, you're going to see a pennant formation up here that we've gone through over the last couple of weeks. The Dow this morning came right down to the 50-day moving average, bounced off of that, and we're almost back to where we're up about 6 points right now. Over the last couple of days, we're seeing some negative divergence. Like last Tuesday was where we had that we took off and had about a 200-point up day, and then we went kind of nowhere after that, and we're still kind of stuck in a sideways pattern here. But what we're on as far as the 14-day RSI, we're still staying above 40 on the Dow. As long as that stays above 40, you're still in a upward bullish trend. We're close to the 50 mark down here in the 30-day stochastic, starting to break down a little bit this morning, but I think we'll probably be back above 50 on that, which also gives confirmation that we're still up. Now we have there was a little bit of negative divergence here in the AD line on the NYSE, but you'd want to see more than this. Now, one point to bring up is that the last time we made a new high on the AD line was actually about 4 weeks ago. I'm not sure where this looks a little bit different, but it was actually the day of August 1st was the last time we made a new high on the AD line. So this is a leading indicator. We are, despite being higher on the market, the Dow the NYSE has about 700 more declining units than we do advancing, and also the volume on the NYSE is almost 2-to-1 to declining volume. The NASDAQ has more advancing volume today, even though it has less units going up. But we'll look at that later on. We also have the new high, new lows. We're starting to see over here. We're looking at the market was going down. We're starting to get a little bit of positive divergence while we're going sideways. We're making more new 52-week highs and 52-week lows. Today, not quite, but it's close to that. So we want to see some expansion in this during the rest of the week if we're going to go to this buy signal. Here's the S&P 500. Again, you see this pennant pattern going into here. Now, one of the things that selling would pick up, and again this morning we broke down to the 100-day moving average on the S&P and the NASDAQ. It bounced off of that, and we're back. The S&P is still down a little bit, 2 points, but if you go from this unit here to this unit here on a pennant pattern, you can actually take that out and go to the measure to the bottom where it either breaks out or breaks up, and it'll give you a target. Now, in this case, if you measure this from here to here, it's going to take you down to about the, let me see, that's going to take you down right to about 23.57. I don't think we're going to get that far. I think what I'm looking for over here is probably to get down to about 24.05, which would take us back to the lows from the end of June, 1st of July, that area. I think that's all the further this market's going to be able to correct if we get to that. But we'll keep an eye on that. We're still seeing some deterioration in the technical indicators. Unfortunately, the RSI is trying to stay above 40, so we'll keep an eye on that. And we did get oversold down here in the 30-day stochastic, but that's starting to pick up again today. So, like I say, we'll keep an eye on that. Here's the NASDAQ. Again, here's that same pennant pattern. We want to see if this thing's going to break out. If this thing here would break out to the downside, that would take you down to about 6,000. My target on this is 6,100. If we break through this and break the 100, that would take us back to the lows from July, I think July 2nd or 3rd. I don't think we're going to, that would be about the downside I would see on this. You can see the positive divergence now on this histogram. We're staying above the 40 level all the time on the 14-day RSI, so the bullish trend is still intact. Starting to see a little pickup in the stochastics also. Now this, there is some negative divergence. This is the AD line for the NASDAQ, and as you can see, we're going to lose about another 300 or 400 units today, which will take us back down to about here. This could show some improvement. This is despite not rolling over, you're having fewer and fewer stocks holding this market up. A lot of that now is rolling over into the biotech. The biotechs today are up another more than 1% again today. So I want to keep an eye on that. But that's where you're seeing a lot of buying is holding this up right here. Now here you saw the another turnaround in the 52-week highs and lows. Today we have a few more new lows and highs. It's almost even with that again. So this is starting to show a little bit of positive divergence as we're going sideways to down. We want to see this start to come up and see if we can get the triple digits on that by the end of the week before we go positive. Now here's something that I wanted you to look at. Now this I mentioned in the last week or so that I thought that we could be seeing that the Russell 2000 may have bottomed. The way we got that was going back all the way back here to January. We drew this line here, which kind of found support. We've tested that support line now for a fifth time. The more an index or a stock tests a trend line or a polarity line like this, the stronger support or resistance that becomes. And so when we did this and we had a double bottom here on this 30-day stochastic, and also we didn't go any lower on the 14-day RSI, I thought that it's very, very likely the bottom could be put in on the Russell 2000, which would be a positive for the broader market. We want to see the small caps lead if we're going to have a new leg higher. And we're still struggling on this at the 200-day moving average. The Russell, it's down 3 points right now at, let's see, 1391. So we're we're still below the 200-day moving average. If we can pop through that and make a run up here towards the 1400 level, that would be a positive for the broader market. Then we can struggle with that and see what happens. But you also have some positive divergence going on here with this histogram on the MACD. So I would be kind of looking at some of the small caps as an area that you may want to nibble away at here if we roll over and go positive. Here's the Dow Jones Transportation Index. I'm not seeing much positive divergence in this at all. We do have some in the MACD. We did make a lower low in this grouping here. We're making lower highs. I put up the Fibonacci retracement level on this. As you can see, this move that goes from mid-May to where we made a new high in mid-July. We've already retraced 50% of that move up, and now we've broken the 62.8% retracement, and we've come up and bumped against that a few times. Now, usually in a short period of time like this, once you break that 50% level on the Fibonacci retracements, you'll usually retrace the whole thing. So I would not be surprised to see this thing go down if we start to see some selling pick up on this thing. We haven't even really tested the 200-day moving average on the way up, but that's kind of watching that. You're having a little bit of positive momentum on that today because trucking stocks have been strong. They're moving a lot of materials right now, that and the railroads, but the airlines have really been hitting the transports hard. Their airlines, I believe, are down about 20%. But we'll keep an eye on this thing to see if we can get a little spike to get up here back to the 200 and get back over this 50% retracement level. About 9,200 would make me feel a little bit better. That would take out the 100-day also, which is basically where the 50-day or where the 100-day or 50% retracement is on that. So keep an eye on that. We want to see this pick up for this thing to move a little bit, firm up a little more on that. Here's the semiconductor index. I wanted to show this, that we're still in a position of strength even though we're going sideways. Here's that pennant pattern. You're getting less of a sell-off in the 30-day stochastic. You're holding that 40 level on the 14-day RSI, which means the bull trend's still intact. You're having a little kind of neutral on the MACD, but if we can get above this level here on the breakthrough back above the 50-day moving average, that would be a positive. We're flat on the semiconductors today after the morning sell-off, so we'll keep an eye on that. If this can get back above the 50-day and above this descending trend line, that would be a positive for the broader market also. It could help the XLK, the technology sector, and the NASDAQ to catch back up to the Dow again. All right, so what I wanted to do today, I wanted to see exactly what's been strong over the last week. As you can see, it's still a defensive sectors. We've looked at this every week. This week we had the REITs and the utilities are the only ones that are up. That was as of this morning, going back 5 days as of from last Tuesday. So the other sectors are still pretty negative. What's the weakest? There's financials and energy still. We'll look at some of these charts going forward here, but the first thing I want to look at a couple different charts that we don't usually look at every week. And I don't want you to get bored with this thing. I had an email from somebody asking me to throw out more stock ideas. And I like to do that, but every week isn't a buying opportunity. And one of the things we're trying to accomplish here is to give you a little better understanding of why certain things in the market are moving the way they are, and then what sections of the market can represent the best opportunities for you to make money. As we have these webinars, as you pick them up and you can figure these things out yourself a little bit and learn how intermarket analysis works a little bit, it'll help you to pinpoint where you need to be. Now you can always go to the Market Edge website and find the strongest stocks once we pinpoint these areas that are stronger or weaker. So a chart that we don't usually look at, this is the TLH, which is an ETF for the 10 and 20-year Treasury bonds. And as you can see this rising up here, this represents price and not yield. Today you can see that big spike up here where we're breaking to a new high. The 10-year Treasury actually fell down to 2.1. Since then, we've bounced back to 2.12. But when you're seeing this in a rising rate environment, you wonder whether the stock market has it right or whether the bond traders have it right. And I guess at some point we'll find out. But at this point, you're looking at lower rates, and they don't believe that the Fed's going to raise rates. You're also seeing, the confirmation, the different indicators and accumulation of these that are also supporting that rates are going to stay lower. You have the stock market guys calling for almost 3% GDP this quarter. I don't think the bond guys believe that. I think they're looking at things are going to slow down. So we'll have to kind of keep an eye on this. But when you see the yields coming down on this, what's going to hurt? Number one, it's going to hurt the U.S. dollar, and that's part of one of the things we also want to talk about today. A second thing that gets hurt by this is the financial stocks, and we'll look at a couple of those today. But not everything gets in trouble because of a weak dollar. So here we are with UUP. Now this represents an ETF for the dollar that you can look at. It's not the actual dollar index, but we've been talking for a few weeks here. We thought that 24 would be support level, and we broke below that today. We're still down on the day. You can see the distribution going on in this ETF. 14-day RSI got oversold. We're down here in the 20s. The dollar may go a little weaker. I don't know how much weaker it can get, but we're going to talk a little bit about what sectors are can benefit from a weaker dollar. But it certainly isn't going to be the financials at this stage. So, whether this shows a lack of confidence in the Trump administration or whether it's a sign that the economy actually is going to slow down. I know the economic data that we've received over the last week or so has been mixed, with housing starts and all falling 9 and 10% last week. If you read the Market Edge daily commentary, a lot of times I'll talk about some of the economic data that comes out. But this is not what you want. You don't want to be buying financials when you see the dollar going down like this. So there are certain areas that we can add to the portfolio, but the financials, I've been saying that you want to buy them on weakness. We'll take a look at an area where you may want to where you could add to some of these. Now, one of the things that we do when the dollar gets weaker, one of the things that benefit is commodities. Commodities are priced in U.S. dollars. The dollar goes lower, commodities prices will usually go up, and they become a little bit more expensive for us. But if you picked up the John Murphy's Intermarket Analysis book, you'll be ahead of the game on this one here. You can see where the dollar really started to kind of roll out of bed. This is DBC, David Boyd Charlie. This is the Deutsche Bank Commodity Index Tracking ETF. You started to see this thing pick up, put it in the bottom. We've come back here, and we've had a little bit of a pullback, and now we're moving up a little bit higher. This is comprised of steel, copper, different materials that we see. Mining, metals, gold, that type of thing, and we're seeing sort of a little bit of a breakout in the commodities again, which is what should happen when you have a weaker dollar. So these are stocks. I know Freeport-McMoRan was weak today, but some of the other copper stocks are making new highs, and I think if we can find some of the metal stocks and mining stocks, it might be a place where we can benefit from the weaker dollar. It's where we would want to be. Now, another thing that's included in commodities, and this is kind of a strange. So this is light crude oil, WTIC, and you're starting to see a rollover in this thing. A lot of people thought that we'd get a spike in oil with the hurricane coming, but it doesn't seem to be the case. Part of that is because all the rain and stuff is inland. It's not affecting the wells out in the Gulf, and you're seeing that crude oil is now at $45.90. The last couple of weeks I've been saying that I think we can probably get a retest of 45, and if that happens, I think our radar is going to go up. If we can get a pullback to this 44, 45 area, that might represent another chance for us to get a couple trades in the oil sector, oil stocks. Not the long-term thing, I don't think, but we're back here. We did get a nice bounce in the oil stocks. We kind of caught on to that. I think we're going to have another opportunity to do that over here. We'll see. But see, you're getting a lot of accumulation in the oil, which I'm not I'm not in this camp yet, but I think, like I say, if we can get down here to this level right in here, we could probably get a trade for a little bit of a bounce. Okay, now this is, as far as the commodities going up, one of the other sectors that should benefit from that would be the XLB, which is the materials sector. Now, the stocks that are in that would include, steel stocks, again, the miners, gold, that type of thing. We have, where's my notes here? We're struggling over here at the 50-day moving average on this. And again, we have a little bit of a pennant formation going in there, but, copper, wood, mineral, steel, building goods. We had a nice, I saw yesterday some of the retail improvement stocks, Builder, Source, and Home Depot got a bounce, but they're expecting a lot of revenues coming in from the flood area. But top groups in this, if you go into the industry group on the industry group analysis and Market Edge, some of the top industries in that listing are diversified mining, aluminum, metals, non-ferrous, precious metals, which includes gold and silver, and steel. If you look up those, do it by relative strength, and you want to find the strongest industries, go in there and click on some of those industry groups, and you'll find some stocks in there that have, rated long, they have a 0 score. Maybe if the power rating's up in the 70s or 80s, those are stocks that have a lot of momentum behind them. And that's a place that you can find some individual stocks in that. Again, I didn't bring up a lot of individual stocks today, mainly because I'm not a big buyer quite yet. I'm still a little leery on this market, although I'm getting close to wanting to move. Now, here's the XLE, which is, of course, has a lot of crude oil in it, and as you can see, this thing just can't get going. Although I'm seeing a little bit of encouraging signs, so far we've made a higher low over here. We want to kind of watch that, see if we start to work a little bit up from here. We were oversold at this stage. We'll see if we can start to see a little bit of improvement in that. We also may have bottomed in the accumulation on the energy XLE. We're going to pay a lot of attention to this because this thing has a pretty good ways to go to the upside. I think if we do see maybe another retest of this and a bounce, we had like a little W formation, double bottom, that would also confirm to me that we could get a trade in some of the oil stocks. So we're gonna watch this over the next week or so, and I wouldn't be afraid of don't jump the gun on this thing, because if something happens and we roll over because the broader market does, this could go even lower. Okay, we talked about what also hurts with the weak dollar. Here's the XLF, the financial sector. You can see from this move from April to the highs back here in around the 1st of August, we've rolled over, we're making lower lows, lower highs. That's due to they make a lot of their money on the yields and deposits and that. And this 10-year's gone from about 2.6, I think, over in here, down to 2.10. And despite everybody talking over here buying the financials because we're in a rising rate environment, you can't fight the tape. And as the yields stay low and fall back to this 2.10, you're going to have a problem. They may start to cut their numbers and stuff for the third quarter, maybe even fourth quarter on the banks if the yields stay this low. We're going to look for support at the 50% retracement off of this move, and that would also coincide with the 100. But if we were to get more selling in the broader market, we can see some polarity would come in over here at the 200-day moving average, or here we're ran the resistance, and here we found support. That would come in over here. I would certainly be buyers of the financials over in here. Again, on weakness, I just don't think you jump all in. You get your favorite stock, some of the bigger banks, and you can nibble away for the yield and go from there. And we'll just kind of watch that, because you want to see the 10-year, at least the yields firm up a little bit. Okay, one of my favorite places to hide out still. Here's the healthcare XLV. Again, we're struggling up here at the 50-day moving average. That seems to be what a lot of them are doing, but we have a little bit of a double bottom here on the oversold stuff with the 30-day stochastic. We're seeing some positive divergence in the MACD. We're holding above this 40 level on the 14-day RSI, which I like. And again, if we can break above this 50-day moving average, I think that would be strong. Now, not only are biotech strong, but you're also getting some outperformance by the pharmaceuticals on that too. So this may be a group where you can get a nice dividend if you're more conservative and you want to pick up some of the pharmaceuticals. I know Bristol Myers and Pfizer, and there was one called Horizon that I looked at this morning that have decent charts. Okay, here's the biotech ETF for the NASDAQ. Remember, we talked about this 300 level. Once we got that breakout, this was going to be like the fat lady singing, the bell gets rung. We had a big gap up, came down, we tested this 300 level, which also coincided with the 100-day moving average. Now we're bouncing back up, and now we're back above that the 50-day moving average, and right now we're back above that 50 days. So that's strong. You also have the confirmation on the biotechs from the MACD. You're getting nice positive momentum on the RSI, and the 30-day stochastic is getting ready to cross over 50. You're not seeing a lot of selling in that. So again, if you go to the Market Edge Industry Group analysis and click on that, you'll find a list of probably 15 or 20 different biotech stocks that have a 0 score. They're rated long, and that's an area that we can probably pick up a few of those. I've told you all along here. I think if you can find a couple strong ones, make a little basket of 3 or 4 you want to pick up and hold them in there for a little bit. Maybe sell a little bit if they spike up $10 and buy half a position back if it comes down. Okay, that's all our time right now. Lastly, one more thing. I wanted to show you another beneficiary of a weaker dollar, and that's going to be the industrial sector, especially the multinationals. They benefit from that, and part of the reason that you're going to lose a currency risk that you when you have exposure overseas. So that when the dollar is strong, you have that currency risk when you bring the profits back from overseas, and also the weaker dollar makes their goods cheaper. So if you look at stocks like Boeing and maybe General Electric, they've been they haven't done much really. They had this little spurt up here with the broader market, kind of rolling over here. We're finding support down here at the 100-day moving average, and but you do have some positive divergence and some accumulation in the industrials, so that might be a place. And I think that the big winners from the last 6 months, 7 months, some of these the FANG stocks and stuff they may be market performers going forward, but I think you'll see a rotation into some different areas. Like we talked last week about some areas that you'd want to go into as far as sectors and industries, and as far as the ETFs go, the top ones that I'm looking at right now are KOL, which is coal, SLX, which is steel, TAN, which is the solar energy. Then you have the XME, which is metals and mining, and PTH, which is healthcare, XBI or IBB, which is biotechs. And the last two I would look at would be the GDX, which is gold miners, and SOCL, which is social media stocks. So those are probably the best acting ETF areas of the market right now. And while you're typing your questions in, I'll just summarize real quickly that again we're still on a sell. I'm actually surprised that we weren't down 150 points or 200 points this morning after that missile violated Japan's airspace. I think that could go on for a little bit further. But as long as we hold the lows from the previous week, which was 21.6 and 21.17 on the S&P 500, we'll probably flip to a more of a bullish stance in the market. Part of that also depends on more improvement on the momentum index, and we saw a big improvement last week where we went from -12 to -6, and we've seen a lot of the excessive bullishness come off of the sentiment too. So let's go ahead and get to the questions right now. I see a couple of them up. If we have to share the screen, we'll do that. Not seeing your screen. Okay, what's your view on foreign stocks and EQIX, a data center REIT? When will Amazon turn up soon? AMZN. Okay, as far as the foreign stocks go, you're going to get two different pictures. If you read the headlines and all, and everyone's talking about the outperformance of what's going on in Europe and the foreign stocks and all this. But remember, you want to hedge your, when you look at some of the ETFs, find a hedged foreign ETF to buy. Now, the reason being for that is because when you're buying in foreign currencies, you can lose 4 or 5% to the when you sell the stock and bring it back down to dollars. If you look at a chart of a hedged ETF overseas, and you look at a regular market like, say, Germany right now or France, you're going to get two different pictures. The hedged ETF is working its way higher. The ETFs in the foreign countries that aren't hedged are trading lower. So make sure. In fact, I'm going to write that down. Maybe next week we've done it before, but we'll look at some of the different foreign stocks and ETFs, and we'll talk about some of the hedging that you can do in your ETF, which will benefit you and help you pick up another 4 or 5%. Okay, hedged ETFs. Someone asked. That is where okay. If you buy stocks, an ETF in say Germany or Austria right now is up like 25%. If you buy that and you sell it over there, okay, that you bought that ETF was in Austria's currency, I guess in euros. Okay, well when you change it back into dollars, you're going to lose. There's a currency trade-off there that is going to take off 3 or 4% of your gains in that. So if you buy the hedged ETFs, they're already buying those things with the currency. They're buying them in dollars rather than euros, and you lose the risk of what a stronger dollar or weaker dollar can do to your holdings. So. Okay, Paul has another one in here too. Let me get back to the, I'm going to look at EQIX. I'm going to try to share this screen real quick. So we can look at some of these different screen share not available. Okay, yeah, if I close this, I won't be able to look at that. Let me see here. Okay, if I close this, I should be able to share the screen now. We can look at some of these charts you're asking about. Okay, while this is coming up, someone asked, should we look at the short ETFs that we've done? Well, you should have done that a couple weeks ago when we were talking. As far as the SDOW and SRTY, if you did that right at this stage, as of today, we are up 3.3%. Remember last year we made about 59, 60% on that. This has been a tough market to go on the weak side. Not saying that the market hasn't been weak when we've gone to a sell on it, but a sideways market isn't going to make us money when we're buying the triple leveraged ETFs. We made almost 10% on the SRTY and about almost 3% on the SPXS, 1.5% on the NASDAQ, but we're still down on the Dow. But we were up as much as 8 or 9% on those. I wouldn't be buying them right now because I think we're going to, like I say, I'm seeing signs that we've probably bottomed on that. Okay, so we can share the screen right now. We're going to only look at EQIX. Will, can you see the chart? Okay. Here's EQIX. This is another REIT, and we've been talking about the REITs. The REITs and utilities, as the 10-year Treasury yield goes down, these are going to go up, but you want to be selective. There's nothing wrong with this chart at all. You're breaking out the new highs. You had the little sell-off this morning, came down, hit support, and we're bouncing back right now. Good accumulation. Again, I like the REITs in here. You just make sure you're not jumping in here and trying to buy a 8 or 9% dividend yield, because if they cut that, you're going to lose a lot of your money on that. So be careful with that as far as on your REITs. But you have one that has nice properties, their revenues are going up, and they're not a mall. You can probably make some good money. There's several land ETFs and housing ETFs REITs that are doing quite well. Okay, we've gone the distance here again. That's about 40 minutes. If you have some questions, please email me at thedoc@marketedge.com or support@marketedge.com. I appreciate you taking some time from your busy day to spend a few minutes with me, and I hope you got something out of it. And I think next week maybe we'll talk a little bit about some foreign investment opportunities. We've done that before in the past, and if you have some questions or some individual foreign stocks you want me to look at, we'll do that. All right, everybody, have a good week, and we'll see you next week.